So today we're going to talk about a UK stock that I own that brought out a trading update or their full year results out, and they were absolutely amazing, and this stock has been on fire since I started buying this stock. But as well as that, there was also a lot of requests to talk about Hims & Hers and Walgreens. So I will talk about Hims & Hers and Walgreens in the coming few days as well, because a lot of you guys wanted to see a video on that. But with this UK stock that's on fire, let's take a look and see how this stock is doing so well. So I hope you enjoy the video. Let's get started. So the stock that's doing really well at the moment is Watches of Switzerland. Another good day for Watches of Switzerland. The stock is up 8%, and since I started buying this stock only a couple of months ago really now, the stock has been on a really good turnaround where the stock price has started going up. So for me, I'm up on this position a little bit at the moment, which is good to see. Now obviously I'm holding this stock and wanting more upside than this, so I think this is still really early days, but as from what we're seeing at the moment, the turnaround is going really well, and that's why I bought the stock. I bought the stock because I believe it's a turnaround play, a stock that really has suffered really since 2021, 2022. As you can see, the stock price fell massively, down 75%. But looking at where the stock price was, the value that the stock was at, I was thinking, you know what, Watches of Switzerland is a great brand. You know, you can't buy directly into Rolex, but what you are buying is a company, an official retailer of Rolex, and obviously with Rolex being a private company, this is the closest that you can get to buying into something like a Rolex. And looking at a company like this and thinking, well, this is a company that's had a big CV boom, and then we've had these higher interest rates. People that have bought these higher end watches have all been brought forward, and now we've kind of get to the normality. The higher interest impact has kind of leveled out a little bit now, and I think, you know what, Rolex are only going to do very well in the next few years, or luxury watches in general are going to do very well in the next few years, and it's a bit of a turnaround play after all this kind of CV and these higher interest rate boom that I think the company will start doing very well. And there's a lot of other things going in the background which we're going to look at today, but everything is moving in the right direction with the stock, and that is starting to play out now with the share price and the financials. So they brought out their full year results. The 52-week ended on the 28th of April 2024. They said they continued market share gains, and they have also reiterated their full year 25 guidance and their long range game plans that we will look at today. Obviously this was posted on the 27th of June, which is today. So the CEO, there was also a webcast, by the way, which is 100% worth looking at, but the CEO came out and said that the US business went from strength to strength, growing at 11%. So even though the share price has been having a tough time at the moment, what is not having a tough time is their US business. One of the big drivers of this is to start using Watches of Switzerland and expanding into the US. And even during this tough time frame, the US business has been growing very well, 11%. So imagine what that would do in a lower interest rate environment in a year, 2 years time. Now, what has also started to happen is that US growth has now started to overtake their UK business. The split is very much 50-50 now, and with their growth plan in the US is going to become a bigger part of the UK business, which is only more bullish for the business. What I said is the UK market is starting to show signs of stabilisation at the moment, which is really good because that's one of the weak areas of the business at the moment. UK and Europe sales were down 5%, increased by significant price increases overall at a time of reduced consumer confidence, but they said they are starting to see that ease into financial 25, which is really good to see. So if this can even just get to like a break even rather than negative growth, and then you've got the US growth, you're going to have a very successful business there. They also talked about their new showroom, the showrooms that they've been adding in, the 15 Ernest Jones showrooms that they've got, and also the acquisition of Roberto Coin, which will push them more into the jewellery space at the moment as they expand into the luxury branded jewellery. One thing that they have launched in the last couple of months is their pre-owned. So they have launched a official pre-owned luxury watches. So you go buy let's say a Rolex from Watches of Switzerland from the pre-owned category, and it'll say that it's approved, they like it, just makes it a little bit more valuable, and they are able to probably charge a bit more of a premium on them, and they're probably able to make more money on them than actually selling from the Rolex itself. So this is a really good addition that they've recently created into the site, and they're putting a lot of these in the locations at the moment. And they said that they are currently seeing sales double year over year in Q4. I think this is one of the reasons why the company has rebounded a lot in the last few months, especially in that Q4 trading update, is because of this new expansion into this certificated pre-owned Rolex that they are doing at the moment. And they're saying that it doubled year on year in Q4 and is performing ahead of their expectations in the US and the UK at the moment, and is set for further rollouts in financial 24. So this is one thing they're going to do, is probably add a lot of this more into the stores that they currently have, which would be really good to see. And that's where you see here the US growth is still very strong, which is exciting. And as long as that UK and Europe growth starts rebounding, we're going to have a really good business here. And the US sales, especially with the Roberta coin that will be added on here, we'll see a good even mix between the US and UK and Europe sales. Just the even margin, as you can see here, was a little bit impacted at the moment with what was going on, and hopefully then we start seeing the recovery at the moment of the adjusted EBITDA that was going on there. Luxury watches was actually okay at the moment, represent 87% of the group revenue, as you can see here. What was another big impact was the luxury jewellery revenue was down 13%. But they said that their branded jewellery significantly outperformed the non-branded. So the addition of like the Roberta coin will also be something that really does help that luxury branded jewellery segment grow even more. Once again, the launch of the luxury, the Rolex pre-owned, which launched in the US in July 2023 and UK September 2023, which seems to be doing very well. And that should be bigger drivers for them going forward. We talked about some of the new stores that they opened up. What you'll see is a theme where a lot of it is in the US expansion going on here. And this is the longer term guidance. So for financial 25, they are still expecting revenue to grow 9 to 12%. That's very good growth. We'll take 9 to 12% for sure. They're also starting to, because of the growing and all these impacts going out of the business, we should start seeing that EBITDA margin and profitability start moving back up in the right direction, which would be really good to see. There is some financing costs going on here, which you can see the tax rate, which is a little bit higher than where we were in 2023, but overall everything moving in the right direction. And they talked about some of the new locations that are coming in. The big theme, once again, that you'll see is there is a lot more US opening stores, but still some of the excitement around the new townhouse looks very interesting. The operated joint venture that they've got going on there. So yeah, there's, even in the UK, there's a few locations which are very interested to see how they do perform at the moment. You can see here that they are also changing the time they report, which I think is really good. Once again, kind of ties back to that US growth. Also, one big thing they're doing is targeting the US growth, but they're also now acting a bit like a US company. Obviously with maybe a dual listing in the US, and also that they are now going to report more often. They're going to report a lot more luxury companies that are in its area. As you can see here, they're going to report their half year and full year results, but also they're going to do 2 quarterly trading updates in January and September. So basically, they're going to report 4 times a year like most US companies, which I think is really good. I really can't stand UK companies that only do two financial updates a year, because the difference between when they report maybe the half year results at some point and then the full year results, you get so much big variations what's potentially gone financial in the company. So this is a good change. I think that at some point it should come mandatory that I think all UK companies should have to do 4 updates a year, but I think that's obviously a really good update. Long range game plan, obviously when we started this video, the thing that they said at the start is that they still believe in the long range game plan of the business, which if you look at that is still to see from the financial 23 financials that they did, is to double their adjusted EBITDA and their revenue targets by financial year 28. So yeah, in a 5-year time frame to double their EBITDA and revenue would be absolutely amazing if they do that. And obviously one thing they're doing is obviously the big expansion into the Roberta coin that they've got going on at the moment, but the growth of the US is how they're going to do that. If they get anywhere close to these targets still, which they are clearly saying that they still think are achievable, this is why I bought the stock. I don't think you'll see, obviously when I started buying the stock when it was a £3 stock or even a £4 stock, I don't think it'll be these sort of levels if it do you get anywhere close to these sort of numbers. If you look at the what analysts are projecting at the moment, we can go as far out as 2027, as you can see here, but they're expecting 2.1 billion in revenue. So I mean, if they get anywhere close to doubling what they did in 2023, it's 3 billion, which is, from analyst forecast at the moment, is even let's just say they grow 10% in 2028, you're about 700 million short on what analysts are forecasting at the moment. So analysts are clearly they're not kind of getting caught into these long-term numbers. So even with 700 million wiggle room there, if they get anywhere close to the numbers that Watches Switzerland believe they can do, the stock will absolutely fly. But even if Watches Switzerland do analyst numbers that they're forecasting, I think the stock will do very well, because I think if you get a company that does 105 million in earnings at a 956 million market cap, that's 9 times to earnings there, which is not too bad at all for a company that's growing double digit. So even with analyst numbers, I think that the company can do very well. But if you believe that they can get anywhere close to what Watches Switzerland have actually set out as a long-term, range plan, that the stock will actually do even better than that. That's where I believe that Watches Switzerland could easily come a £6, £7, £8 stock. So we'll see. It'd be interesting to see how close, who's going to be right. Are analysts going to be right, which I think the stock will still do very well. But if Watches Switzerland are right and they do hit their longer range plan, then the stock will definitely fly from here. So I'm just happy to kind of sit back now and watch. Personally for me, where the share price is, I won't be buying the stock at these levels. If I am going to buy the stock, it needs to be like a good... I did buy this week before earnings, as you guys on the Patreon know. I did buy this week, and anything that's above £4, I won't buy personally. So I got to say, if you haven't bought this, I think you might have missed the boat on this one. I mean, it could drop, and if it does drop, maybe then you do get your chance to maybe buy into the stock on the drop. But for me personally, I'm not going to buy any more at these levels, and I'm just going to see how the rest of the shares perform. And if they do perform very well, I'll be happy. So yeah, good update from Watches Switzerland. Clear drivers on the US growth, and if they do hit that longer term game plan, I think you've definitely got a winner here. So well done to anyone that has been buying Watches Switzerland, below that kind of £4 mark. Really, I think you might be onto a winner here on a good turnaround play. So that's the video on Watches Switzerland. Like I said, I'll try to do a video on Walgreens and Hims and Hers, because I've also had a lot of people requesting videos on them too. Hims and Hers obviously having the short report at the moment, and also Walgreens with a horror show of an earnings, which is the complete opposite to Watches Switzerland. I'll try get both of those videos done either Friday, Saturday, Sunday. They'll be with you in the next kind of couple of days. So yeah, keep an eye open for that one anyway. I hope you enjoyed the video. Hit the like button. I'll see you in a bit.